I'm Jason Rzucidlo, standing outside the Gem Theater in Detroit for the 30th annual SAA Auto Outlook Conference. Now this year, autonomous vehicles and the Trump presidency were two of the topics that were discussed in great detail. Stay tuned for the highlights.
After the deep recession, we have seen a modest recovery, especially when you look at economic growth. But the reality is this has been the slowest recovery since World War II. And that explains part of the angst that we see, that the economy seems to be underperforming. And now we have a new administration coming in. As I'll show in some charts, the market reaction has been pretty positive. But the fact is, everybody's expecting big change, and that's creating new uncertainties. China, the other big market for us, is clearly transitioning to a new growth model. The road is somewhat bumpy, but again, as I'll show in the data on auto industry, it's a very different performance. Unfortunately, the emerging markets have been hit hard by the Chinese slowdown, and we've got Russia and Brazil in recession. But Europe has been the surprise this year. There was a lot of concern with Brexit, with the refugee crisis and everything else, that things could easily go downhill in Europe. But in fact, Western Europe has done better than expected. So I think, when you look through the whole thing, the slower economic growth is clearly creating the conditions for change in the political climate. We've got Brexit. We've got the Trump election. We've got the growth of nationalist parties across Western Europe. So these are all areas of concern. But then when you look at the auto industry, it's almost like it's decoupled from what's going on in the economy. China just had a bumper year, blowout year, whatever you want to call it, but more than 3 million unit increase in sales this year, partially driven by changes in taxes, reduction in taxes, and easy money, but nonetheless, an amazing rate of growth. You have the US, North America, all three economies reported all-time record sales. So it wasn't just the US, North America itself showed record sales. Sales, as I said, in Western Europe exceeded forecasts. UK, with all the concern about Brexit, reported an all-time record year. So I think when you look at the auto industry, other than the two biggies, Brazil and Russia, things look really good. And, I expect these trends to continue. I don't think we'll see another 3 million unit jump in China. They've raised their taxes again. But clearly we'll see growth in China. I think North America, again, will be at or near record level.
And then, again, we want to take a look at what some of the longer-term impact is. The Trump impact was certainly well orchestrated, and we certainly agree. There's going to be more or less three different areas that certainly could impact the market. You've got the trade side, you have certainly the economic side, and then the regulatory side. And there are going to be some other ones as well, but those are more or less the big three impacting the automotive market. And from our perspective, we're doing a lot of analysis looking at three different scenarios. One could be all his campaign promises come true, and certainly what impact that will have on the economy, as well as the automotive industry and the infrastructure. Second one could be, what if we can only get some of it through? That there's some reticence within the House to drive through a lot of the reforms. Some of that could be the corporate reforms, maybe the emissions legislation, trade issues as well. And then lastly, what if we have what we've had for the last 8 years? Gridlock, and that other than some actions from an executive side, we have gridlock within the House. So those are three different areas that we're looking at, and certainly we'll comment on some of that as we continue on.
You need to be able to execute as usual and in entirely new ways, both in your home.
But we're going to see definitely this movement into more shared vehicles, and eventually it will start to erode, and individuals will desire to have access over ownership, especially in the younger generations. But the real profound impact is going to be in a post-autonomous vehicle world, which is the upper equator of this particular graph. And in state 3, which is really somewhat of a state that probably isn't going to be a significant state, where you have personally owned autonomous vehicles. The real shift is going to be obviously when we get to shared vehicles of autonomous vehicles. And that's where everyone is racing towards. And for those of you who were at CES, that's really where a lot of the focus and the attention is. And again, the real compelling reason for this, we believe, is the economic reasons. We can decrease the cost per mile by 2/3 by moving into this quadrant. Now, when we initially did this study, this was kind of somewhat new. I think we all know a lot of this material, and a lot of these states have been talked about. So the real question becomes, how is it going to evolve? Where is it going to evolve first? What segments? What countries?
Change is slowed by history and preferences. It's an enormous industry shaped by habits, consumer preferences, regulatory regimes, etc. I think people coming to the industry from outside the industry tend to overlook this huge inertial pressure behind the industry. So they'll look at, you sold 17 million cars, but there are 250 million on the road. And this is what you have to kind of take into account. Change will take place, slow, steady consolidation of ownership, growing sales of EVs, more autonomous driving, of course. By the way, as far as autonomous driving goes, I encourage all of you to go watch Anchorman and see Will Ferrell engage cruise control. If you don't remember that scene, it's worth looking at again. He thought that meant you could put the cruise control on and then go into the back seat. Well, you'll watch it. We do believe, we don't want to come across as Pollyanna-ish, there is a risk of a dramatic shock to the system, which was specifically 2 speakers pointed out, if mobility services converge with autonomous vehicles and in so doing succeed in breaking the age-old bond of ownership between Americans and their vehicles. I personally think that on the back of the Declaration of Independence is written in pencil, everybody gets a car. The whole country is founded on driving. Bruce Springsteen, the Go West, the Hit the Road, Jack Kerouac, etc. But if you can make autonomously driven taxi-type things cheap enough, at some point we roll over and we enter this world of eternal rental. Right now it's mostly in San Francisco or New York, where, if a parking space costs you $250,000, you're probably not going to have a car. I will point out, though, that in London, 60% of households own a car, and even in New York City, 45% do. I don't have the figures for San Francisco. But this is an existential threat to the industry if you can just have relatively fewer cars run real hard. Shared kind of things. Though, as I talked to one dealer in Texas who said, the day I approach a rancher and tell him I'm going to share his F-250 dually are the last words I will speak on earth. So it will vary by use case. And remember what we saw earlier in the day, that trucks are the majority of the market, and I don't think trucks are easily shared, but maybe they will be. Any case, by the end of the decade, the system will likely remain intact with changing economics, etc. And I'll go into that now very quickly. Core topics, volumes, hey, look, 2025, 17 to 18 million units. Just like everybody's predicting for next year, say, we're predicting that far out the same number. Though if you think about it, this is actually a relative shrinkage because the population grows through natural births and immigration. Well, natural births. But crucially, a major shift upward in the marketplace. By 2025, the rich will buy new cars, the rest of us will buy used.